Coinbase Global Incorporated was founded by Brian Armstrong, an early supporter of the blockchain technology that supports Bitcoin transactions. He expanded the business into new areas, increased the quantity of digital tokens that were made available on the platform, and employed hundreds of new staff. Coinbase grew to become the most important cryptocurrency trading platform in the United States, and the company went public in the spring of 2021 with a market value of around $86 billion. As a result of the cryptocurrency market crash this year, that worth is now around $21 billion. And as a result, Mr. Armstrong is now tasked with managing a broad corporation that is struggling to survive in the face of increasing costs, decreasing cash flow, and most lately, a challenge from federal authorities. Adam Dell, chief executive of Domain Money, an app that enables investors to purchase investments including cryptocurrency and is a competitor of Coinbase, remarked that Coinbase expanded rapidly before it got its sea legs. Welcome to Crypto News. Today we are going to talk about the fall of Coinbase. Stay with us until the end of the video to learn more. Like and subscribe to this channel and hit the bell button to get notified of all the latest updates. Let's jump to the topic. Coinbase, the largest cryptocurrency exchange in the United States, announced net revenues of $802.6 million for the second quarter of 2022, with profits per share, diluted, of -$4.98. This was based on a net income of -$1.09 billion. The firm reported for the quarter that their adjusted EBITDA, which is a highly non-GAAP number, was -$151 million. According to the averages that are given by Yahoo Finance, analysts had anticipated that the business would incur a loss of $2.65 per share off of revenues of $832 million. According to their calculations, Coinbase came up short on both the top and bottom lines. During the course of regular trading hours, Coinbase share prices dropped by around 10.5%. Following the publication of Coinbase's earnings report, the company's shares has experienced a moderate decline, despite the fact that early after-hours trading has been marked by some degree of chaotic activity. Results for Coinbase's second quarter. In comparison to the same period last year, Coinbase expenditures increased significantly, by around $500 million, but the company's income dropped significantly. A dip of around 60% was seen in Coinbase's net revenue during the second quarter, which fell from $2.033 billion to $802.6 million. Because of the rise in expenses and the fall in revenue on the top line, the firm is now in the red in a significant way. In point of fact, Coinbase went from having an operational profit of $874.7 million in the second quarter of 2021 to having an operating loss of $1.04 billion in the second quarter of this year. Other expenditures, such as those connected to interest, contributed to the company's net income being below its result for its operational income. What factors contributed to Coinbase's more expensive cost basis? The expenditures associated with share-based compensation have increased significantly over the course of the past year, climbing from $189.3 million in the second quarter of 2021 to $391.5 million in the most recent quarter. When looking at spending in other categories, research and development, R&D, and general and administrative, G&A, expenses both saw significant increases, although sales and marketing expenses saw a decrease of almost $45 million compared to the same time period the previous year. According to an initial examination of the company's most recent balance sheet, Coinbase continues to be a prosperous enterprise. The cash and equivalents held by the corporation, however, have decreased from $7.12 billion at the end of 2021 to $5.68 billion at the conclusion of the second quarter of 2022. Additionally, Coinbase owns client cash holdings of $7.18 billion, down from $10.53 billion at the end of 2021, and most significantly, $361.7 million worth of the USDC stablecoin, which is a significant increase from just over $100 million at the end of the previous year. Crypto context. Coinbase's primary source of revenue has been negatively impacted as a result of the broad slowdown in trading activity across all cryptocurrency exchanges, transaction fees. The total trading volume on Coinbase dropped from $309 billion to $217 billion in Q2, a loss of 30% from Q1 2022. This decline was largely caused by a decline in the number of monthly transacting users, MTUs, which dropped to 9 million from 9.2 million over the same timeframe. The corporation stated in its shareholder letter for the second quarter of 2022 that the present slump hit swiftly and furiously, and that we are witnessing client behavior match that of previous down markets. Coinbase mentioned in its letter that the majority of its retail clients are trading less often. As a consequence of this, the firm said that its MTU mix has been shifting toward non-investing activities like staking. The company acknowledged that these non-investing activities are less lucrative in terms of the income that they bring in each user. The decline in trading activity was partially explained by the fact that a significant number of Bitcoin and Ethereum owners chose to keep their holdings rather than sell into market instability, according to the business. The second quarter saw a decrease in net transactional revenue from consumers totaling $616.2 million, while institutional trading revenues were $39 million. Both retail and institutional trading revenues saw a decrease throughout the period. The slowdown has also been reflected in Coinbase average daily trading volume, which in August has stayed relatively flat since July at approximately $1.8 billion despite the recovery in crypto prices over the past month, as shown by continuously updated data from Nomics. This comes despite the fact that Coinbase reported its financial results for its second quarter earlier this month. This is a significant decrease compared to the average daily trading volume of the exchange in March of this year, which was $3 billion. This was before the crypto winter began in earnest. The announcement of the firm's financial results comes not long after the company announced a number of new collaborations during the third quarter. These partnerships were considered by TechCrunch as possible growth levers for the company over the subsequent quarters. Coinbase entered up a partnership with BlackRock, the largest asset manager in the world, which manages a total of $10 trillion worth of assets, in order to give institutional clients access to Bitcoin. It is also being included into Meta's future plans to integrate cryptocurrency wallets, which are now in development. The cryptocurrency exchange has been in the news for a number of different reasons recently, including the collaborations that were discussed earlier, but also due to the significant and rather contentious layoffs that took place in June as well as the hiring freeze that took place at that time. In order to remain healthy amid this economic crisis, the corporation withdrew its offers and let go of around 18% of its workforce. If you made it to the end of this video and are interested in knowing more, let us know which part of the video you liked the most in the comments section below. We will appreciate your comment and work to make a video on your desired topic with an account shout out. Please like and subscribe to the channel and hit the bell button to be notified of our next video. Thanks for watching.